Yeah, what's up, guys? Good evening, everyone. How you doing? We're back again. It's GJ, the analyst. Yeah, if you're watching this video, you're opportune to be part of this very interesting section I'm going to release here tonight. This very evening. Yeah. So I want you to stay tuned, guys, and let's get what we're going to learn today. So we've been growing so far so good. Yeah. So we've talked a lot, we've done a lot, and we've learned a lot. So guys, in this video, I'll be teaching you because that is where we are now in the lesson course outline, which is the top-down analysis. Because I know that many of us don't have good analysis to our trading, and it is a problem to us knowing the analysis of a market. So I'm going to do a very quick top-down analysis for us so that you guys can understand what I'm saying. Okay, guys. So this is boom 1000. Sorry, boom 300, guys. Okay, now let me go down to the H4 time frame. Okay, so actually, yeah, so okay, so yep, yeah, guys, okay, uh, yep, so okay, currently now, so you can see this is an H4 time frame, and okay, let me talk about the analysis when analyzing the market. So when we talk about top-down analysis, let me make some write-ups so that you can understand. So what does top-down analysis simply means? Question mark. So when we talk about top-down analysis is the process of you analyzing the market from the top to the bottom or top to down. That's why it's called top-down analysis. From the top, the higher time frame to the lower time frame. So that is a top-down analysis from you getting or colliding with so many time frames to tend to get what actually the market is saying or to try to get the actual decisions of the market. So that is why top-down analysis is important in the market, that you need to have a proper check up or proper outlook of the market, that you are sure that this is the direction of the market, not hallucinating. It's not something you are guessing, it's not something you are thinking, it's not something that maybe you are not sure of. Top-down analysis is something that you need, you don't guess, you are you've done the analysis and you're sure that this is the actual trend of the market. So you are doing that to get the right information about the decision of the market, what the market is actually deciding. So many traders don't um work within market decisions, so they always assume. You don't assume in the market, but make analysis. You can make prediction. Your analysis here, it is true that most times the market might not necessarily respect your analysis, might not necessarily respect what you do. But even in as much as they never respect what you do, never meant that you are wrong. So most times the market might tend to respect your analysis, most times they may not respect it, because we need to understand market algorithms and the price directional movement. That is where the big boys are in play. So that is what you need to know about the market. So you don't necessarily need to feel angry or offended when the market never goes your way or direction. So top down analysis is a process of analyzing the market from the top to the bottom, like from the top higher time frame to the lower time frame, so that you get you actually get what the market is saying. So these are the mistake a lot of traders make. They tend to always analyze the market from only on lower time frames, which is very bad because you can't just make your decisions on lower time frame. You cannot just make an analysis on lower time frames and you just hold on to that. No, you why the process of top down analysis is very paramount that as a trader you need to know exactly what the market is doing. You want to get the actual move of the market so you don't miss the move of the big boys because the big boys we are meant to follow. When I mean the big boys, I'm talking about the market maker, those that move the market, that's those that control the market. So the big players in the market. That's what I mean. So it is very good you know this because if you miss this very section of knowing the top analysis, you find it difficult to analyze the market. So you want things, one thing, the things you need a trader or you need to know is how first of all knowing to analyze the market and entries too. So those things are very paramount as a trader. When you're trading, you're taking a trade, you need to understand these two concepts. So knowing analyzing and knowing when to find entries. So but the process of analysis, it is something that you can know automatically just in a moment. It is something that will take you time and some period of time to learn because the process of knowing how to analyze the market, it is something that you don't just know instantly. It will take you time, take you so many periods to understand. The more you keep checking out the market, the more you keep looking at your chart, the more you keep studying, and the more you keep practicing, you are building yourself to be more familiar with the market. Because when I mean familiar with them, I'm not saying you because nobody can actually get that trauma. But when I'm saying getting that, what I'm trying to say is, in a nutshell, is you getting acquainted to the market that you can look at the chart and you can tell, yeah, you're sure that okay, even if not 100%, you at least you make a proper prediction that okay, I know this market is going to do like this, and I know it's going to do like this, just like that. So this is what I'm trying to say, guys. So you need to know this concept of market analysis because when you know them, it's a very nice process for you to start up, not starting up your trading journey, but it's going to help you go in a long way. And when analyzing the market, I usually advise that you start your analysis um when analyzing the market is I say it's very good you start with the higher time frame because the higher time frames will give you the actual trend of the market because when you don't follow or navigate with the higher time frame you always get stopped out because the higher time frames give you the directional move of the market. They are so certain. Higher time frames help you to be sure about the market. So people that work on lower time frame, you can't just analyze on lower time frame and take your entries on lower time frame. It is a bad way of trading. So you need to work with the higher time frame to get a picture of the market. Then before you can go down to look for your setup time frames and your entry time frame. So these are the three things you guys need to be looking at for your directional trend, your directional time frame. That is that your trend time frame. That is one. Okay, let me make a write up for that. Okay, so now how do we start the three analysis process of analyzing the market? The first thing is your directional time frame. Directional time frame. Hope I'm correct. Directional time frame. Number two is your setup time frame. Your setup time frame. And number three is your entry time frame. So your entry time frame. This is one of the things, the three things you'll be working at as a um as you do your follow the step-by-step process of analyzing the market. So when I'm talking about okay, so I was back to what I'm saying. We have these time frames. Of course, you guys know that. So we have this major time frame. See how this guy is spiking. very very well. It's spiking very well. So okay, guys. So I was saying something because I said we have three time frames. Sorry, we have um the monthly time frame, have the monthly time frame, have the weekly time frame, have the weekly time frame, we have the daily time frame, we have the hourly time frame, and we also have the minute time frame. Okay, so guys, now these all these time frames are there for a reason, and they are not just there because they want to be there. They are there because these are so many time frames that gives a lot of piece of information. These are time frames that so many traders work with. So, and this time frame has their own role they play. So you will not say because you trade on the minute time frame, you will not say because you trade on the minute time frame simply means that H1 is not valid, or because you trade on the H1 the daily, you will not say the H1 also is not valid. No, all that time frame, they are very very important. So that is why it's good you know the um each of the time frame what they are saying, because they all have every information they are giving. So oh sorry, um so the monthly, the weekly, the daily, hourly, and minute. So you need to know what all these time frames are saying. So the ability for you to get the informations of what this time frame is saying, each of them, then that is what enable you to understand the exact market trend of the market, because a lot of traders get confused. A lot of traders get confused with so many time frames, so whenever they are in a trade, they are always kind of, which trend is this, what is the market doing, what is, you get yourself confused with a lot of so um so many things, so many time frames. So you need to focus on the very aspect of trading style that suits you. I usually say this. So you will need to focus on a trading style that suits you. So you cannot say you are not a swing trader and you are looking for daily time frame. What are you doing on daily time frame? They have you are, even if you are intraday trader, you expect to look down to lower time frames. Like I said, the 1 hour, 4 hours, yeah, then at least those hourly time frame can be your decisional. You can make your decisions with them. Yes, even if you are a scalper, you can also look into the hourly time frame to get the actual direction of your market. That is you the time frame you can work with. But you are not a swing trader. If you're a swing trader, you at least you can look for the daily time frame, the H4 time frame. So even if you can, even if you are a positional trader, like the long term trader, just like the institutions and bank, that is what they do. Like so they work with the monthly time frames, the position traders. So they work with the monthly, those ones that stock their assets and commodity in long term. So that is why you see those monthly and weekly. So because their assets are so large, and they don't do like trade the way we trade. So trying to take something and go on, their own is long term. So they, when they want to go into the market, they go for long term. So that is why they can put in their money for months and weeks and just like that, and they are holding just like that. So that is why that is how they tend to move in to their own that's what they have called the position traders also. So the banks, the big boys, just like that. So that is how we tend to navigate with all those time frames. So you need to pick out time frames that is suitable for you and your trading style, so that you don't get worked up with so many confusion of time frames. So Okay, so guys, yeah, because I'm a swing trader, so that is why most times you see me always working on the higher time frames, which like the H4 or the daily time frame. So because of the kind of trading style, or because of the kind of trader I am, so I am so conversant toward the higher time frame. So you can see that I'm on VIX, I'm on boom one and boom 300 perhaps. So you can see I am on that trade. Now you can see that on I'm starting with the H4 time frame. So um yeah, so what do we have on boom 300? Can you see, guys? I've taught you guys about structure. If you have been following my videos properly and you have been following all my video course outline, you should understand what I've talked about market structures, the uptrend, how the uptrend moves, and uh, I told you guys that in an uptrend market, this you have people tell you how uptrend move like this. These are textbook move. Do you see the way the uptrend market is moving? Can you see that? So this is how that an uptrend market moves. So you tend to move like they tend to move like this, and most times so they move in the kind of direction, yeah, just like this. So these are uptrend market move. So you can see this now. What kind of structure of market can you see? It is crystal clear that we are in an uptrend market, so which you can see very nice here. So this is our main focus because this is our directional trend. Yeah, so this is our directional trend, guys. uh this is our directional trend we can use to check the trend of the market. So um okay, better off let me delete this highlight so you can just know what I'm saying. So this is our directional trend. So we have this trend now that boom 300 is on bullish trend, yeah, which is clearly seen here. That is why I took the buy day. So you can see higher a high here which was broken, a higher low, so higher high and a higher low, a higher high and a higher low, a higher high and a higher low, a higher high and a higher low. So with this impulsive move, so made a new BOS was broken and price made a new high there and a new low, higher low. And before this impulsive one to the upside there, so we have this higher high and so you can see that many, some person took this trade yesterday. Yeah, I also sold, but I told them that this market is still in an uptrend because I already know that it is not true with the buy because I already see this first and foremost. Since I know that this market is on this bullish liquidity structure to the upside, I already know that the market is still buying. We're able to sell here. Yeah, traders, a lot of traders took this from here because sorry. Okay, a lot of traders took this sell here. Let me highlight it up there. So let me highlight that level. Sorry. Okay. So let me shift that. So, okay. So a lot of traders took. Sorry. Okay. So a lot of traders took this sell yesterday. Yeah, I also took my this morning because I know that actually, yeah, if you look at this level, what happened, it is true that price rallied back to where our resistance, that is our supply block. You can see this was our supply block here, so on H4 time frame. So you can see that price rallied swiftly back to the supply block. Yeah, quite fine and all right, but you don't only take interest on this because price only rallied back to the supply block. Yeah, some persons will tell you because they saw this move here, they tell you that sorry, they tell you that the market has changed its trend. No, the market hasn't changed its trend. So you just rally there. It is normally for price, even price movement. So when they try to be moving in a particular level. So they tend to respect areas, zones. So that is how it is. So they tend to respect, especially boom and crash. They tend to always respect levels in the market. So because it rallied back to this supply block, and people, a lot of traders said the trend has changed. So it never changed, although it gave us a sell. If we look down to lower time frame, you can see if you go down to lower time frame, you can see that it gave, this was just, although to me it's not a sell, I saw it as just a kind of a rally. So I know that the trend has not changed yet. That was why you see I picked the buy from here. I picked my buy from here because I know the structure has not changed. So the buy structure, sorry, I think that this is not where I picked it. So let me go down to um yeah, so this was actually where I picked my buy from. So I marked this block here on, yeah, I marked this block, sorry, on H1 time frame. So I actually knew that the trend structure has not broken yet. So the market only give us a sell because normally a market price action, you a market needs to um do what we call for it to buy. Definitely a market need to sell for it to buy. So a market need to sell for it to what to buy. And why a market need to buy, okay, why a market need to buy for it to sell, so vice versa. So you need to know this concept. So you don't just say because price rallied back to this supply block, yeah, the market has changed its trend, it's going to be a long sell. No, you need to consider these levels too, these structures levels. These levels are very important. So I was actually aiming this level. So this was my main level here. I was aiming that if price, because this is the last bullish leg that pushed price to the upside here on H4 time frame. So I was actually aiming that level there, that probably if price comes here, rallied and come to this place and break this support level there, then I know, okay, even if I will not just, I will not enter yet for itself. So I want to see price, even if it gets here, even if price gets here, I want to see it rally back. So although it might still spike back here, maybe to form a double bottom pattern, then sell. So but it's not yet confirmed for me. So even if I can still take the sell here, quite fine, but I'm watching at this level, so it can still come back here then still spike again. So but what I'll do is, even if it gets here, I can still take my sell entry. I will not enter it here, I will go down to lower time frame, so to pick out for a sell. But the first thing here is I want to see it break, because this is the structure here. I'm saying this first, we have this high, this low. Yeah, price have not taken off this one yet, so I need it to go down to this one, then break maybe a candle or whatever, full, not a false breakout, breaks and a nice retest that can show that price has actually taken off. Or even if you not close below this level, I want it to go, maybe probably go up and retest maybe the OB, the other block there of February gap there, that can show that, okay, when I see this is a sign that the price is already changing its trend. So I will know that, okay, that the structure, or there is a CHOCH, that is a change of character about to take place in the market. So but when this is not formed, it's not in place, I cannot decide yet if the market is going to sell, because all this is need to be put in place. As a trader, you need to be sure, you need to do your analysis well, so you don't get caught, because the actual way you do your analysis will determine how you are going to take the you are going to get your entry. So when there is a misappropriate analysis, it tend to affect misappropriate analysis tend to affect trading style. So when you don't have a good analysis, when you have a bad analysis, it tends to affect your trading entries and your trading style. So when you have a good analysis, it can guarantee you of taking a look at this now. So you see how I took this trade. So analysis too matters. So you need to know actually how to pick entries in the market. So how to analyze the market. So like what I was saying, guys. So I was telling you guys that back to what I was saying. So you can see that yet we are still on the bullish. You can see change break of market structure BOS. So it's still a bullish market. So like I told you, I want to see price taking off this level here. When it comes take it off, then I will know that okay, it's not yet confirmed for itself. So until I see market make a new um low, that is a new high low, I'm sorry, lower high, I mean to say. So that is a confirmed sign that okay, that price is it wants to revert back for itself, because anything can happen here. You can still choose to so you can see on I don't want to work with the daily time frame, because if I work with it tend to get many of you confused, because you can see even here in our daily time frame we still have a very bullish momentum candle. So you can see, and this is where price started from. So it started from this. Let me zoom out. So you can see that price started from this support level, and you can see that the daily candle is still telling us that our candle here formation, can you see our candle formation here is still bullish. So it is a sign that the bulls are still in control. So what am I saying in that sense is that this guy can still can still buy maybe probably up back to this area here, although I we have liquidity on the side. So you can see, so I'm expecting, although we are not sure, but it has not taken off this um daily high here. So let's see if it takes it off, then we can have this, then a rally, maybe we can sell from here, price myself from this place, a rally back here, but not sure. So we want to see what price is doing. So our major time frame, we are working with this first, and you can see on daily time frame we have a bullish market trend or move. You can see from days that the market has been buying. So we had all these buys here. We had all these full buys, and you can see, and that is what we are getting here. This is the result of all that move you saw on daily time frame. This is the result here. So we can see that we are still, daily is confirming the market as a buy, hourly is confirming the market as a buy, and let's go down to each one time frame. So you see, you see confirming, you can see how the market bought. So you see confirming our the same buys, and 30 minutes is still confirming what about the same what buyers. So we have three buyers in the market. So we have three buyers in the market, three time frame confirming the same entry, so and the same market direction. So you will, first of all, what you need to do, so don't get a complicated um how would I do it? How would I want to say it? You want to, now what you want to do or what you are looking for is, first of all, make sure that your the time frames you are working with are saying the same thing. Like they are having the same direction, that is corresponding with the same direction. What I did now, you can see that on H4 here we are having what, a bullish market trend. So you can see that our market trend here is a bullish trend, and on H1 I can see, I told you the same thing. You can see that all our trend is saying is still a bullish trend. So you can see how bullish market um trends move. So you can see we still have, if you have not on the, you don't understand about trend identification, watch my video about the market trend and market structure, so to get what I'm saying. So you can see that we still confirmed our bullish momentum our bullish structure, and 30 minutes, which is another lower time frame. So you can see that it is still saying the same thing, that our market confirmation is still what bullish. So you can see we had a bullish structure. So 4 hours is saying bullish, 1 hour is saying bullish, and 30 minutes is saying bullish. So you can see that all our time frames are saying the same thing. So the next thing is your setup time frame. So this should be your setup time frame. If you have continued your time frame on 1 hour on 4 hour time frame, so what does your setup time frame say? So your setup time frame, it is where you set up your you mark out what the market is going to give you. That's your point of interest, your key levels. So you can mark out your key levels here. So just like what we see here, so we can see that this sorry, so you can even use this time frame, not necessary you go down to, you can still go down to lower time frame, but not really necessary. You can also just stick to this particular, after doing your checking the direction of the market, you can just stick to this um 1 hour time frame. Just do your markup markups point of interest on, then focus on, you can also use that to take your entries if you like. Or you can also go down to refine. That is why I talk about refining of your order block for entries. So what I do is that, if you know that maybe, because most times, like you can see here, that this was made, so you see how this was refined, because although if you go down to H4 time frame, you see where we had our order block here. You can see that we had our other block here on H4, this place here. But you can see what happened here, that price went back to mitigate this other block here, this first other block here, this first other block here. You see how price went to mitigate it, and so this was sniper entry. So because price came to mitigate this, our first um other block level, so it was refined. So you see that price never get TFS. So this is how I tend to catch the fast move of the market. So very, very fast. So you can even go down to lower time frame to refine and refine to get, although I will talk about refining of that in our next video. But major thing is talk, or I'm picking up entries. So major thing is just for you to understand the market directional move, top the analysis, not the trend of the market. So you can see that I've marked out that level, and this one too. So I'm picking up these levels now to pick up and for an entry. So you can see, yeah, so SMC, so that's what I trade majorly. So you can see again, so I have another entry here. Yes, I had another entry here at this level. So you can see, guys, so this is SMC smart money concept. So that is what I trade majorly. So I pick out this level again for my entry. So I wait for price action to come back there and mitigate. There you can see the buy. So when price comes here to mitigate those crucial zones, so you see I pick out for a buy, and you can see the momentum to the upside, and you can see how price came back, because there is an order left here. So price come to pick their orders and push price to the upside. So it is very simple, guys. It's very, very easy, very, very easy. So I've learned this, and I believe you learned them too. So to pick up very, very nice entries for yourself, and you enjoy the market move. Yeah, believe me. Okay, guys, so I'll be stopping here, and make sure you watch this video, rewatch it, do correctly what I did here. Make sure you follow it and practice. Go and backtest them. Backtesting is very important. Backtest what you have been taught. So you ask me questions. If you're not clear, I'm going to explain them to you. So go and backtest what you just watched now for more clarity and more vital information. So you go and backtest them properly, and So you are going to pick up a time frame for me as your assignment. Pick up a time frame. So analyze corresponding trend time frame. So the one that has that are corresponding, that is saying that what I did, they check the time frames, each of them saying the same thing. So you do that for me and mark out your key levels. So guys, on our next topic, we are going to be talking about entry. So stay tuned guys, and yeah, we'll see you later.